Welcome to our Audible Flashcards to help you prepare for the NMLS Safe Mortgage Loan Originator Test. The definitions we will be covering today are important terms for the Federal Mortgage-Related Laws section of your test, which makes up 24% of the test. Please keep in mind, these are just definitions or explanations of terms meant as an aid. This video is not meant to give you all the information that might be necessary to understand about each of these terms for the NMLS test. Real Estate Settlement Procedures Act, or RESPA, or Regulation X. A federal statute that requires lenders to provide home buyers with information about known or estimated settlement costs. Mortgage broker. This is an individual or organization that markets mortgage loans and brings lenders and borrowers together. A mortgage broker does not underwrite, fund, or service mortgage loans. Equal Credit Opportunity Act, ECOA, or Regulation B. A federal statute that prohibits lenders from discriminating against credit applicants based on race, color, religion, national origin, age, sex, or marital status with respect to any aspect of a credit transaction. ECOA's definition of elderly. ECOA defines elderly as age 62 or older. Truth in Lending Act, TILA, or Regulation Z. A 1968 federal statute enacted as the first subchapter of the Consumer Credit Protection Act to safeguard consumers in the use of credit by 1. Requiring full disclosure of the terms of loan agreements, including financial charges, 2. Restricting the garnishment of wages, and 3. Regulating the use of credit cards. Home Ownership and Equity Protection Act, or HOEPA, of 1994. HOEPA was enacted in 1994 as an amendment to the Truth in Lending Act, or TILA, to address abusive practices in refinances and closed-end home equity loans with high interest rates or high fees. TRID. TRID is an acronym for the TILA RESPA Integrated Disclosure Rule. This rule is also known as the Know Before You Owe Mortgage Disclosure Rule. New legislation as of October 2015 requires the loan estimate and closing disclosure, replaces the GFE, TIL, and HUD-1 disclosures. Loan consummation. Loan consummation occurs when the consumer becomes contractually obligated to the creditor on the loan. Home Mortgage Disclosure Act of 1975, HMDA, or Regulation C. This regulation provides the public loan data that can be used to assist in determining whether financial institutions are serving the housing needs of their communities, public officials in distributing public sector investments to attract private investment to areas where it is needed, and in identifying possible discriminatory lending patterns. This regulation applies to certain financial institutions, including banks, saving associations, credit unions, and other mortgage lending institutions. Mortgage brokers are exempt. The HMDA definition of dwelling. The HMDA definition of dwelling means a residential structure whether or not attached to real property. The term includes but is not limited to a detached home, an individual condominium or cooperative unit, a manufactured home, or other factory-built home, or a multifamily residential structure or community. Fair Credit Reporting Act, FACRA, or Regulation V. A 1970 federal statute that regulates disclosure and use of consumer credit information and ensures the right of consumers to have access to and to correct their credit reports. Many states have enacted similar statutes. Fair and Accurate Credit Transactions Act, or FACTA, of 2003. This was a 2003 amendment to the Federal Fair Credit Reporting Act, providing free annual credit reports to consumers and establishing measures intended to help prevent identity theft. One of the Act's better known and more heavily litigated provisions prohibits merchants from printing the expiration date or more than the last 5 digits of the card number on a point-of-sale credit card or debit card receipts. Gramm-Leach-Bliley Act, or GLBA, of 1999, Regulation P. a federal statute that repealed both parts of the Glass-Steagall Act prohibiting combinations among banking, securities, and insurance companies, as well as related conflict of interest provisions for such companies' officers, directors, and employees. The Act also regulates the collection, disclosure, use, and protection of consumers' non-public personal information. The Mortgage Acts and Practice Rule, or MAP Rule, Regulation N. This was created in 2011 to prohibit misrepresentation in a commercial communication about any terms of a mortgage credit product. Electronic Signature Act, or the e-Sign Act of 2000. The e-Sign Act allows lenders to use electronic signatures as a valid signature for financial transactions with the permission of the borrower. The e-Sign Act also allows for electronic records to satisfy any federal statute. Homeowners Protection Act, or HPA. This regulates the cancellation of private mortgage insurance. Dodd-Frank Wall Street Reform and Consumer Protection Act, a 2010 federal statute that promotes the financial stability of the United States by improving accountability and transparency in the financial system. The statute affects nearly every federal agency with jurisdiction over finance or consumer protection, and nearly every segment of the financial services industry. Consumer Financial Protection Bureau, or CFPB. An independent federal agency that regulates consumer financial products and services. The Bureau protects consumers by restricting unfair and deceptive business practices, by promoting financial education, taking consumer complaints, and enforcing federal consumer financial protection laws. It was established by the Dodd-Frank Act in 2010 and began operating in 2011. HUD, U.S. Department of Housing and Urban Development. HUD is the primary housing and lending regulatory authorities in the United States.